Good morning, guys. All right, we got Tom Struck in the chat. Nominous. Always the same people always here first, eh? Maybe a band-aid. Nice name. Sanjay. Forget about it. The Duncan. The Duckin. I always get Duncan in my head for some reason. All right, well, we got a crazy move last night. We caught some of it, but not with Bitcoin. Well, at least Bitcoin. Yeah, the signal was kind of funny. What's that here? I'm gonna scroll up and grab it. We were looking at as I was basically writing up the setup for Bitcoin. I realized the R&R wasn't really there. We had a bit of a pullback, but then it kind of just like teleported to our target, and I didn't even get a chance to get in, unless I was using like the 5 minute for confirmation. If you're using like the 2 minute, it made more sense. But I'm not usually a trader that reacts off of like what 2 minute does. And yeah, the 2 minute was very clear. We had a proper pullback with structure. We got the confirmation of the breakout of the level that we were looking at, and we hit the value area high like very shortly afterwards. So on the 2 minute chart, it would have been easy to react in the 2 minute chart, but the time frame that I was looking at, definitely couldn't get in. So I rotated my attention over to Ethereum, and we're still in with 30% of the position. And like our technical target was here, but there was a supply concern here, and yeah, I just took 70% off after I saw like a sell wall, but we broke through the sell wall relatively easily, luckily. And I'm just holding in with 30%, hopefully for a continuation. Because Bitcoin's looking like really strong right now. It is in an area where we should technically be preparing for shorts. Like we just hit this high supply concern from back in February. This value area high, this previous value area high. There's an order block here. There's some confluence here. So I just wanted to make sure that everyone's mentally prepared for this to potentially be behaving like a large range if this confirms to break to the downside. What I'd want to see to get that like easy confirmation for it to reverse is just like a higher high. It'd be great to get an SFP off of this wick. To have the SFP, I'm going to be marking this. Let me go to the 15 minute for it. I'll be marking these body highs right here. And I'll be marking the wick. There we go. So if we come up and we grab that liquidity from a signal candle and close back below this orange line here to represent these bodies, then we'd have a local SFP. I'm hoping that we go range bound here for a little bit first, and then get acceptance into that range, so we have more additional confluence of potential reversal. And then we can start targeting these lows here from that SFP. We don't know what the structure is going to look like yet, but based on what we have right now, I would be targeting these lows. And if we break those lows, then we can have a continuation, because if we have an SFP, this would become a change of character occurrence. And that would give us more additional confluence for a continuation to the downside. So I think this would be a really great short. However, if that didn't confirm as an SFP or doesn't confirm as like a change of character, then we could prepare for the long and see what kind of continuation structure we get. But right now, we don't really have any defining continuation structure yet, other than the fact that we bounced off this macro point of control from the daily. So we zoom out on the daily. It's the daily ranges macro POC. If we come back in, if we were to visualize this as the pathing, potentially building like a pennant structure for continuation, right? Then we can use this level here and this level here to create a mast with a trend line. And you click and drag, and during the breakout point, you could have a momentum-based target of a flag, but you should be waiting for either A, an internal range change of character to target the top of the range to see if there's continuation to that target. That would be like the best R&R scenario. Or if you have a value area here, you want to see a break structure continuation off the value area high to give you that target. This way is more higher risk because most people are preparing for shorts at the top of value area. So you have to look for very specific types of behavior. So I prefer, if we do have a range here that to help define the continuation, trying to catch the bottom of the range for the continuation of the break. But that's Bitcoin. So we're just chilling until it builds that structure, and it probably won't until around like 10 a.m. today. Unless we get the bear structure, which could happen honestly anytime. Like we could come up really quickly and build an SFP. For Ethereum, the trade setup that we gave, let's see here. Yeah, the conditions were a 15-minute candle close. And at the time, it was an inverse head and shoulders. But the key area never really changed. When we had the inverse head and shoulders here, if we wanted to have that 15-minute candle close, instead we kept adding more liquidity, which helped induce a more like faster paced move, which we got. We got in on this was the candle close we wanted to have. We jumped in on this candle right here. And then we used this level here as our stop loss guard. And it evolved into like another fast-paced move to the upside. We broke right through the POC after the second chance. There was a massive sell wall here in the order books, and it knocked us down here, and it knocked us down here. But when we broke through it during this wick, there's no more sell wall. So I was kind of crossing my fingers. We had enough buy pressure to get through it, and then we just we obliterated it after that. So far, yeah, so good with this setup. We kind of want to have Bitcoin do a continuation to help define our reasoning for staying in this trade. If Bitcoin gives us bearish structure, which I'm more prepared for than the bullish stuff, then Ethereum should follow along with it, and we might have to get out of our trade. So right now, this is a key level that I'm watching, but if we get the higher high, then this key level has more meaning. In terms of order flow, there will be more stop losses here, more liquidation levels here if we get that higher high, because traders are going to react off something like that. And a lot of them get caught in a bad situation. So unfortunately, we kind of use their liquidity as a tool to help us with our own trades. When we have the chat, so I'm up early and fairly active when price action is slow. Yeah. Do you do the same chart to trade on and do your analysis? No. So I'm using Bitstamp right now, which is not exactly the best chart for like trading with scalps and stuff like that. For my Bitcoin and my Ethereum, it's because I like to do macro analysis a lot in my teachings when I do like coaching calls and stuff. So I like to use Bitstamp because they have like pretty much all the candles of the asset, not just it doesn't start too late. If you're going to pick a chart to do an analysis on, I would recommend using Bybits charts. Like Bybits charts are great because they have like tons of liquidity. You can go into like the 5-minute or 3-minute or 2-minute time frame on something like Bybit and not expect gaps in your chart. So I go over to like the 1 minute. Normally on Bitstamp you'd have these crazy wild gaps all over the place. You can see them a little bit on my screen. You might not be able to see them through your side, but yeah, there's gaps all over the place. But if you're looking at a Bybit, have really good liquidity, so that has like really good candles to go off of. But when you're executing your trades, the same level that you want to have broken, let's say on the asset that you're trading, you need to make sure that the exchange you're trading on breaks that level as well, and then take action. And sometimes that will give you like a late start. So just to be super cautious if things are like a hairline away. But I trade on Blowfin. My link is down below if you want to sign up. We're doing a tournament right now. So if you want to join the tournament, it's for up to a $10,000 prize. But yeah, make sure you can do your analysis separately on a separate chart. Can you explain quantitative easing and is the time coming? I don't know what you mean by is the time coming. Quantitative easing has been pretty much around ever since the gold standard got lifted. It is technically related to trading because of the fact of most of us are Bitcoin maxis, at least a little bit of like most of us are. Yeah. And Bitcoin's kind of like the answer against something like quantitative easing. Quantitative easing is basically when you're going to a bank and you're asking for a loan, or you're putting money in the bank and they only need to keep like 10% of what you placed into the bank, and they loan out the other 90% basically to other people. And when people pay off their loans, they're consistently doing this ratio over and over and over again. Only 4% of cash now is physical. The rest of it is digital, created from quantitative easing. And the sad truth is, if all of us wanted to go to the bank and withdraw money at the same time, it's not going to be possible. I get a hard time going to the bank asking for $4,000. I have to give them notice because they don't have the cash on hand. They don't have the reserves. And then quantitative easing is basically just them multiplying your funds to lend it out and create this infinite cycle of inflation, basically. But it should be illegal, in my opinion. And I hear the regulations are getting even more loose. Like, they're not even going to need to have any form of reserves at all. So that's it's gonna be terrible. Can we look at Litecoin? I think it's about to break a double top. Yeah, a lot of things are about to break a double top. It looks like we got Bitcoin pacing its way to building its second potential top here. We have Ethereum that's already potentially created it, but I don't trust its top here. I feel like it could come up and grab this liquidity first before actually coming down. Let's take a look at Litecoin, see its similarities. I'm pretty sure I saw Litecoin just skyrocket with everything else, so it makes sense for it to kind of like chill out. Yeah, there's a crazy amount. So it looks like it got to its range macro low. We were actually concerned about this potentially being acting as a form of neckline for a large double top. But now you're talking about this, which makes a lot of sense too. We've got, all right, we got, it looks like it's got some relative weakness. If you look at the pace in which everything else is forming its structure, right? There's Bitcoin, slowest, Ethereum, second slowest, Litecoin, already at the neckline. So yeah, it does look like it's forming a double top. The unfortunate part about this structural double top is I don't trust them as much when they don't create like a higher high first, or at least sweep the liquidity first. Because it gives you a sign that there's less market maker participants trying to use liquidity for an exit plan. And we don't have that change of character occurrence on the 15-minute time frame when we have a lack of a high being grabbed. So this is all internal. So what I want to see, because I don't trust these ones as much, I'd like to see it break first, retest, break a structure continuation, use it as resistance, then use this as a stop loss guard. Right now, our stop loss guard's way up here. So we can either A, get a bounce first or after the break. So if we get a bounce right here, then I'll use this level. And along the way down, we had to watch 89.47 as a potential barrier. Because we could wedge here and then go up. But if we break through this barrier, what I'd want to see in a short like this is acceptance into this value area. The value area high has got a really decent, strong volume shelf. So 87.91 is going to be relatively decently strong. But if we get a break of structure and acceptance into that value area, then we can get that rotation to the value area low. So we have to take it in stages. Each barrier, like 89.47 is a big barrier. 87.91 is a bigger barrier. And then the final boss is this POC. And if we break that POC, then we're definitely getting to that value area lowest target. So this could be a really good R&R setup, like a 1 to 4. But yeah, I'd wait for Bitcoin to give us the big warning sign, because I think that this could consolidate a little more. All right. News today. Yeah, we got FOMC coming out today at 2 o'clock, at least my time zone. There we go. Yeah, FOMC is up here. We find out what they're going to be doing with the rates during FOMC. So I don't think that they're going to be making any changes. I don't think it'd be a good idea if they did. I think there's too much conflicting data with the tariffs and how it could be impacting the economy. So I don't think it'd be a smart call for them to make any adjustments. So I'm kind of hoping that they don't. That they just chill out for a little bit while we wait on the tariffs and negotiations going on with Trump. We need a Trump indicator. Well, the Trump indicator is Twitter. So I would like create a Twitter account if you don't have one. And then, yeah, follow him and see whatever he has to say. Because sometimes he's a little bit of a toddler when it comes to stuff he says on Twitter. So it could get pretty wild. Like he's got no filter. Like he could be posting, anything he kind of wants, right? That's the beauty of freedom of speech. Dot, please, from Runway. Yeah, let's take a look, man. Bezo suggesting that we might have a daily naked point of control retest at 98.252. 98.252. Yeah, man, that's a good possibility there. We should look at the heat maps right after we look at DOT and see what's going on with the liquidity for Bitcoin. So DOT. We looked at this yesterday. What was our key level that we were watching? The downtrending momentum. Yeah. So we broke the downtrending momentum. Actually, I don't think it was like during a live that we were talking about this. It was likely during the coaching call. So here we've had, this was what we were watching yesterday with DOT. We've had this like wild wick, and I didn't really trust it until shortly after we saw like a whole bunch of stacking liquidity. It was getting stupid. And I jumped in on this one, but I didn't signal this one because there's some things I didn't like about it, but ended up doing pretty well. We got downtrending momentum break shortly after it started cooling down. We got a deviation away from the value area. Then we got acceptance back inside the value area right here. And now we could pull the fixed range from the moment we got that reacceptance. Yeah, we can pull it all the way to here. And we're currently at the active value area high. We've got uptrending momentum, but it's breaking and confirming its resistance right now. I'll draw it out for you so you can see it right here. So this is the momentum. It's breaking, confirming its resistance, which is insanely common when you have a head and shoulders. The right shoulder is usually a retest to momentum. So we're right now confirming a short on dot as we speak. So I think that if you're going to be jumping in on this short, which just confirmed last candle, you'd be targeting this low here first. So I'll be watching $3.93 as their potential target. And the R&R isn't great, so I'm not going to touch it. If we break past this, then your R&R can extend, but you got to watch if a barrier like this is in your face, you got to treat it like a potential target and how it could impact your R&R if you're forced to close your trade. So if I see like a opposing change of character in this area, and I'll probably be using like something like the 5 minute with something this local. Yeah, and then watch it around here. So we get that opposing change character, break of momentum. Then you definitely want to get out. Okay, but yeah, when it comes to, and Anonymous is kind of right. Trading FOMC is like going to the casino, very degen. You can trade leading into it. If you got a good position, you can, let's say we jump in on a short here and the FOMC is like what's around 2 o'clock. So be here in this vertical line. So I'd recommend if you ever have like a significant event on the day, or if you're trying to control when you should stop trading, like, and you're like an over trader and you're trying to make rules for yourself to stop over trading, you can create like vertical lines to tell you like when you should like chill out, stop trading. And right now, for example, we're using this vertical line to define when the FOMC meeting is going to happen. So if we're getting too close to that line, you should stop, don't take the trade, and wait for the results of the FOMC meeting instead, or else you can get burned. Yeah. Thanks, waiting for the break and retest to enter. Nice. Eyes on link now. It's Dave Cryptic Shankland wants to look at link. Let's take a look. I believe our community jumped into a link short with Brian. And they might still be in it. I know we were looking at a short too. What is it, the 15 minute? Oh, that was very local. We're just counting on this move here. We can delete that. That's not really relevant. That link short must have done really well. I'm not sure when you guys entered, but we just broke momentum and we're double topping off of a previous macro valley area low at 1407. So we got good confidence for another drop. I don't like the posture. I do think that we're going to come up first before we go down. but that's not up to us. We might not get that. It's we have a key amount of liquidity right here. We had liquidity added here, but was taken. This would be more so a continuation level. This is not something I would short. I'll just take that off just in case someone jumps it on it. We'll grab trend line. We'll see what happens. Yeah, I want to see more structure. Right now, like, you could prepare for like a local scalp long, but we don't have any structure to find an entry yet. Not even in the a little bit on the 5, but yeah, we need more structure. But this is a zone where you would typically prepare for a short-term scalp long for a link. Took dot short, favor shorting alts. Yeah, Bitcoin dominance was a little awkward yesterday. If we go to the dominance chart, we're still climbing. Like, it's nuts. We're at 65.27, getting to the top of the supply concern on the daily. It's just nuts, man. It just keeps on going. Like, I have huge key levels at 66.5. Now let's see how we react off of that. We're just slow climbing our way up to it. And normally if I saw this structure on an asset, I would be like preparing for a big short, like a big correction. We'll see what happens. But around this area, we'll see what happens to dominance. I've got a feeling that it's gonna be a big, like a relatively decent correction on the dominance chart. So that either means like the UST dominance is going to climb, or alts are going to do really well very shortly. If we maintain our current active pace, like it's probably going to take a week or so, but our current active pace suggests it could take about 2 weeks if we keep going the way we're going before we get up to that level. It's wild. But yeah, that's in the DXY. It's struggling near a really important area, like insanely important area, and I'm worried about the United States and negotiations with Japan, because if they frustrate Japan, like they could sell all their U.S. treasuries and the DXY, you would see a really harsh reaction. We can fall down to like 95, 77 for something like that, which be a bullish like inverse correlation to Bitcoin. Like Bitcoin would pump as a result usually. Most safe havens would too, actually, like gold and silver. We were dancing around that VWAP, and this is an internal key area here. So we break that area, we'll come right back down to here. So I'd mark where are we at right now? We just hit the golden pocket with this last wick. Which would give us more additional confluence to this break right here. And I would mark this level right here as potential local demand zone. we go. So if this breaks, you're very likely to go here. And around here, we prepare for the reversal. But by the time that occurs, we shouldn't be trading because it'll be really close to our. So you might be able to jump in the short, but as soon as that meeting starts, you might need to be preparing for it to come back up or a continuation down. Can I share my thoughts on Atom? Yeah. Monday signal, Litecoin repeat potential. Yeah, we're thinking that. We're seeing, oh, we just got a double top. Yeah, we just confirmed it. A break. Yeah, again here, I prefer a retest than a lower low. Stop loss above the retest level. A breakout trader has already entered. They would have entered on this candle here. But you'd have, I wouldn't really trust it, but you can have a stop loss guard here or here. In this scenario, I'd be using this, and that would define like a really poor R&R, so I wouldn't jump in. So that's why I want the pullback and a lower low, so I can have a better capital guard. Dot must be doing well. Yeah, coming down. Let's take a look at Atom. I hold some Atom, and I stake it. I believe I get like a 9% return. I haven't done TA on it since February 26th. Okay, so Atom is in like a pretty massive key area relative to this chart data. Like this is the chart data from 2019 to where we currently are. And this is a previous strong valley area, and we're below bear market levels. Like right here, this white line here is basically the bear market lows, and we've gotten below it, which is pretty harsh. I know that Cosmos has some inflationary damage, which we should go over today. For anyone who doesn't know how to do analysis on like finding out the inflationary damage an asset might have built into its tokenomics, if we can go over all that. Let me just get rid of this line here. Yeah, I'm gonna mark these levels here. Let's get rid of this. Get rid of this one. Don't need that anymore. That was a long time ago. A long time ago as well. I want to add these back in. Well, no, I'll leave it there. All right, let's go over the inflation for Atom. Let's find out what it is, because I don't have it on my chart. So we go to the way I usually do it. There might be a better way. Actually, I know there's a better way. We can use ChatGPT, but let's do it the OG way. So we can go to basically search up the asset that you want to do market cap analysis on to find out the inflationary damage. I figured that Atom would be near the top 10. Doesn't look like it's there anymore. So ATOM, Cosmos. I'll keep a look at my monitor to make sure you're able to see everything that I do. So after you search up your asset in Cosmos, you want to go down here. You'll see historical data. I'm going to move my head around here a second. I'm freezing up. 1 sec. Or did I click something else? I did. Okay. There we go. So down here in the bottom left, you'll see historical data. You want to look for this date where the all-time high occurred. So September 19th, 2021. 4 years ago, the price of Cosmos or Atom was at $44.70. So we're going to look for September 19th, 2021 in the historical data. And we're going to go over here. We're going to click on this icon. And we're looking for September 2021. August, September. And it's September 19th. So we're going to go between 17th and the 21st. Continue. And within this range, we're just going to look for the highest market cap day, which was September 19th. You're going to copy that number and you're going to throw it into your calculator. My computer's being super slow. All right, so we got the market cap in there. So you want to divide that market cap by the current supply. So we go over here and copy the number that populates when you hover your mouse over top of the supply, because that will give you the full number that you need. We know that we have a max supply of infinity for Cosmos, so we know that the inflationary damage is going to keep on occurring unless they basically rebuild their whole entire asset. So we divide that number into this, and we have $25.25. So that's pretty rough. So if I go over here, I'll put a horizontal line. I'll type in the coordinates of, was it 25.25? Where are we? Yeah, I believe it's 25.25. Yep. Here we go. So this tells us that if we were to put all of the same amount of money that was in Cosmos at the all-time high at $44 and put it into the market today, we would only be at $25.25. So that tells us that's the inflationary damage that occurred from its tokenomics. If you got the exact same amount of interest into Atom today, it would be $25. So you have to treat this as its own all-time high in a sense, because it's the market cap all-time high. And there are tons of institutions that behave and make decisions based on retesting these levels. So that kind of tells us that we could never see an all-time high again for some assets, right? The inflation isn't as bad on Cosmos that we've seen on other assets, but it's still pretty harsh. That's like a 50%, almost 50% to the all-time high. And make sure you mark, when you do a line like that, make sure you mark what it's for. So it'll be market cap, all-time high. I don't know why the text colors are green. There we go. So now you know when price action gets up there, what to potentially prepare for. And you think that's bad, it's not nearly as bad as like a lot of other assets. There's some out there that have crazy tokenomics that inflate the crap out of their token. And that's like some things, like a lot of like stock traders and stuff like that, they're not really used to. They're not used to a supply that's constantly evolving and changing. Some assets are deflationary, some are inflationary, and it's important to know which ones you invest in, like what they do. Because like, for example, you don't want to invest long term into like a DEX token because they're constantly creating more supply in order to issue out rewards through their liquidity pool systems. So you study the tokenomics before you dive in and decide, I want to hold this for X amount of years. And if the inflationary damage isn't as good as the rewards that you're getting from that asset, then you know your rewards might not be able to combat the damage itself. Just like the bank, where you're promised 2% on your high interest savings accounts, but the inflationary damage is a heck of a lot more than 2%. So keeping your money in the bank usually causes your cash to devalue over time. And your purchasing power is constantly being devalued because of quantitative easing. We were just talking about that. How is the inflationary damage on Doge? Well, it's 10,000 tokens per minute. So you need $10,000 more $10,000 more dollars of worth of interest per minute in the asset to keep it going. But I've done the analysis on it, and it actually, you'll be surprised about how much it's not. I think Atom's actually kind of worse. So right now, for Atom, locally, we're looking at the 4-hour time frame. We've been inside this range for about 91 days. So we've been in here for a little bit. Now we're at the value area low where you anticipate like preparing for longs. We grabbed previous liquidity from back in April when we swept that low. We just had an SFP, local SFP, right here. When we come up, we grabbed all the liquidity with this candle and closed back inside the range. But would you take it? You know, your stop loss being way down here and your initial barrier being right here. If this candle closed a lot lower into the range, I probably would have taken it. You have much better R&R. But yeah, so right now, let's go zoom in. We have the hourly levels here. We got our hourly change of character occurrence already. So we get a pullback here. We could build an inverse head and shoulder structure, and then we need to break this high. Or we could go range bound until we fill this negative space, which could take 3 days. This is a massive range, so it could take quite a bit of while. What are the average age structure? 4 days, 7 days, and we've been here for 3 days. So between 4 and 7 days. And the momentum suggests 3 more days. So again, we got to give it some time. But I do think that this is a time to prepare for longs for Atom. And we could potentially target the, well, first target would be the POC, because that's some distance. That's crazy distance. That's 10%. And then the next target would be the value area high. That's what I'll be waiting for Atom locally. I hope that helps you out. Karma, better buy Karma then. Yeah, Karma, fixed supply, and it's deflationary. So the value of it long term just keeps going up. All right, we got Bitcoin about to break this double top. We got DOT continuing going down towards our primary barrier target. We've got Ethereum coming down to potentially test these neckline levels. If Bitcoin's going to break that local double top, then we will see Ethereum come back to these levels here. And I want to see how we behave off of this before I close my full position. So I only got 30% left in the bag. My stop loss is in the profit zone, so I can't really lose anything, but it will impact my monthly net R&R if this ends up breaking to the downside. Then I'll just close the rest of the position and then look for a new setup. Litecoin. We're probably not going to get that retest now on Litecoin. Any breakout traders might have taken it. Calculate XRP while you're there. We can look at XRP if you want. Short Bitcoin. Strong conflict short caused yesterday. It's wild Bitcoin. I'm not sure what you mean by that, man. Yeah, we got lots of strong confluence. Prepare for a short here. And we're currently rejecting off of the previous value high here in confluence with that double top. But yeah, let's look at the XRP one. So let's pull up the XRP chart. I might have already done XRP. I feel like someone's asked me that one before. May 5th. And we're talking about preparing for shorts here. Looks like it's doing really well. I didn't take the short, but it looks like it's doing really well. Let's zoom out. On the... Well, we're at the all-time highs for XRP. That's why I didn't do it. What makes it the most important is seeing between the point of like an all-time high and the bear market low where the inflationary harm mostly is. And let's say it's here, and that might have caused like some halting over here. That's when it's most important. But we're at all-time highs right now for XRP. So the information is fairly redundant. Like, it's not going to help us at all. Like right now, like finding out the inflationary damage between January 25th and now isn't that important for something like XRP. So I don't think the tokenomics for XRP is that inflationary, where we need to watch something like that. If it was like Cake token or Uniswap's token or BuySwap or anything like that, then yeah, maybe, because they inflate like crazy. And assets like that, I believe, are going to be in a forever downtrend unless they improve their burn structure. They add $1 billion a month. And relative to their supply, what is that percentage? And that's kind of like your answer, man. So XRP. They had $1 billion a month. That's okay. Well, that 213 billion. So they inflate by 7% per year. So that's the same kind of inflation as Chainlink, if you want to compare it to something. And Chainlink has yet to hit its all-time high. And I've already done that kind of analysis on it because I'm a big holder of Chainlink. If I zoom out, Chainlink's market cap all-time high is $35.96 against the all-time high of $53. So you can tell, obviously off the hop, that Chainlink is performing better than... No, XRP is performing better than Chainlink, which is words I thought I would never say. But it's happening. H-bar still on my radar? Oh yeah. Yeah, H-bar still on my radar. What got it on my radar is its simplicity of creating contracts. It'll allow the adoption for developers to be like, it's pretty intense. Like anybody could build a contract on H-bar with their nano contract system. And we broke, if we go to the 4 hour, similar to DOT's positioning, like not relative to like a massive low like DOT was, but in the terms of like breaking momentum and its current active behavior, looking a lot like DOT's. Like we broke at inverse head and shoulders. We have yet to hit that target. The target is up here at $2 or 0.23, so like 23 cents. So we still have to hit that target. We hit this supply concerns high, and we're getting a correction off it. So hopefully the next time we retest that, we'll be able to break through it and fractalize and build a larger inverse head and shoulders and give us an extended target. But one thing at a time. We need to get acceptance into this previous value area, which had a lot of influence over the price action in the past. So I'm expecting 21.8 to be a potential barrier or conduit for a launch if we get acceptance into it. Yeah, H-bar's on my radar. I feel like I don't own enough H-bar, but it's so volatile. So you gotta be like, you gotta have alarms everywhere to prepare for like any like seed exits at least, or any exit plan in general. This thing moves around like like a psychopath. I do got to head out soon here, guys. Historically, altcoin season didn't start until Bitcoin dominance hit 70%. Yeah, but we also had confluence of Bitcoin dominance when it was around that area for the relative unrealized profits of holders to be overheated at that time too. So I don't think that the dominance chart is going to be the full answer in knowing when the altcoin season is going to occur. We need to have people in a large amount of gains to start rotating those funds, like have a reason to rotate those funds. And right now, they don't really have a reason to rotate funds. We need this chart to be in like the overheated zone. Like historically, we'll see Bitcoin overheat. Then during the time of overheating, the altcoin season usually begins. And when the daily change of character occurs on Bitcoin, that's when we're like prepare to get the heck out kind of phase in the market, even your altcoins. Because when Bitcoin's change of character occurs on the daily, the opposing negative one, then the bear market usually begins, and it's harsh for alts. Like alts will get demolished, and the ones that survive are the ones that you kind of want to watch long term. Oh, yeah. XRP hasn't broken its 2018 all-time high yet. Are you sure? Do I not have? I don't have all the historical data. Let me check here. XRP. How long has it been listed on these? Let's take a look at KuCoin. Yeah, it's not. I don't think XRP had a. You might be right. I don't know. I have to take a look. CoinMarketCap should have it. All-time high. Yeah, you're right. $3.84. $3.84. Bro, okay. Well, I've been charting it wrong. I thought I had all the historical data on my chart. So this is the all-time high here. Well, that's what at least what Coinbase is saying. Look into that. Neat. Well then, do you like to short alts in bear market, or do you prefer to stick to Bitcoin? There's some I wouldn't mind shorting. It depends on the asset. I might short Ethereum. But I wouldn't really. It's hard to call that an altcoin. It is an alternative to Bitcoin, so it technically is an alt. But yeah, there's some I might short. But Bitcoin's funding rates are great during the bear market, so I'll be trying to preparing for a big short. So I'll get paid from the funding rates. So basically, when you're entering a trade, a lot of you guys might already know that they're on top of your chart on the exchange. You'll see like a funding rate fee countdown, and it's usually between 8 and 12 hours depending on the exchange. Some exchanges even charge you every 4 hours a smaller amount. But those funding rate fees, if they're positive, basically when they're positive, anyone who's in a long is paying people in a short. If they're negative, anyone who's in a long is getting paid by people who are in shorts. But even during a bear market, most of the funding rate fees are positive. More people are entering longs than they are shorts. But so if we call the top using the macro on-chain analytics, and we get that daily change of character occurrence on Bitcoin, if you enter a short, you're basically earning passive income along the way down to the bottom of the bear market. And sometimes it takes like over a year to get to those lows. So you can be making money every single passing day while being in the trade. And there's maybe like 5 or 6 days that will have like a negative, where you'll actually end up getting charged instead of paid. So if you are someone who's confident in shorts and you want to do like a macro swing short on Bitcoin when everything's confirmed as the top, like when we're in that overheated zone, we get that daily change of character, it would be a great time to enter a short and just get paid passive income and use those funds to invest in whatever you want, either a dividend portfolio or real estate. If you got paid enough, like funding rate fees is relative to your volume. So it's not based on your margin. So if you're trading with like $1,000, your funding rate fees will be based on what the kind of leverage you use on that $1,000. So if you use like 10x leverage, your funding rate fees will pay you like off the $10,000. And you can look at historical funding rate fees for your exchange, and that can allow you to, that could be a tool on how you'd pick the exchange to do that on, to kind of like answer Brandon Nova's question there. So what exchange you use, you can either do it based on like what you're likely going to get paid by looking at the funding rate fees, historical data for that exchange, or you can do it based on like, can you safety. I would recommend do it based on safety. Like what are the reserves are like with that exchange. If they don't show the reserves, don't do it with that exchange. Like would never do it with something like CaseX, because they don't even show you what they're doing with your money. They could be dead in the bear market. So you can't even confirm that because they're not showing the reserves. But like Blowfin or Binance or Coinbase or Bybit, any of the exchanges that actually show what they're doing with your money, those are ones you can safely hold a short with. So you can watch their reserves. I watch the reserves every single day. It's a part of my routine to find out like if they're doing anything shady or if there's anything you need to worry about. But I'll be using Blowfin for it. Please chart XRP on the Bitstamp chart. Yeah, I've been using Binance. And so what I'm going to do, because I don't want to lose all this, I'm going to press Control. You guys can copy me if you want. Press Control, click, and drag. Then press Control C. And now I'm going to look for Bitstamp chart. Where art thou, Bitstamp? Right here. And now I'm going to press Control V. And all my TA transferred over. And sometimes it doesn't work out. like this scenario right now, it doesn't work out. Let's see. So I'm looking at the Bitstamp chart, and it doesn't show me 2018, man. So it's not really going to help with that kind of scenario. And the reason why it won't work out is because the coordinates of the exchange might be unique. So whenever you click on anything, there's coordinates linked to it. So your horizontal lines will work out most of the time, but some of your poles might not work and stuff like that. It'll mimic the 2017. Yeah, I'll look for like a better chart for this, man. You don't have to worry about doing it during this time. We'll find it out later. Oh geez, Alpaca did nearly 100x in 10 days. How much percent do you plan on risking in that short? Oh, the big macro one? I'll probably lose about. Macro trades, like I always advise people trying to risk to lose like either 0.5% or 1% of their account. But whenever it comes to macro trades, I always break my own rules. Like the last time I risked to lose like 6%. The time before that, I almost risked to lose almost everything, honestly. But that was the the very first macro long I've ever did on Bitcoin. Over here. Where are we? Yeah, this one here, I risked to lose like 6% of my entire wealth. Here, I was really degen, and I risked to lose quite a bit. Like pretty much everything, all but $5,000 of my money. But I only had 15 grand at that time, so I risked to lose probably 66% here and 6% here. Next time, I say I'm not gonna risk more than 1%, but it'll probably be close to 5%. Because those rules never fail. They've never failed before in the history of Bitcoin. So it's all based on raw data, right? It's not like based on like a trend line or something crazy like that. Like it's all based on raw data. And that's why I encourage people to look at liquidity heat maps and the order books, because that's raw data that's going to assist you with your trade. Not extra. Oh, see. Okay. Thanks, Mike. Yeah, against the US dollar. Didn't realize I had it typed out that way. That's better. Now we have our all-time high data. Let's look at just want to look at this candles really quick. Get like a legacy SFP or something crazy. How are we behaving off these bodies? Damn. That's stupid. Just like, let's just grab that. There probably isn't even liquidity there anymore, but let's just like behave as if there is. And grab that and leave. So the people who bought the absolute top were finally given 1, 2, 3 days to get out. They probably got out with a limit exit if they were smart. Just like, yeah, that's kind of funny. Pull a new value area on XRP. I do gotta go in like 2 minutes, guys. I got another call with the community for trade hunting. We might not be able to get anything, so I'll talk to them about maybe doing another call. Just because it's low volume right now, right? People are scared to trade when we have the FOMC like coming like right here. But yeah, guys, that is pretty much it. It's just preparing for drops mostly. We got DOT jump down. Anyone who jumped in on that, congratulations. That was a pretty good short so far. We got a new break of structure on the 5 minute. So if you use the 5 minute to define your entry, you can move your stop loss here, and now you can move it here. If you get another break of structure, you can move it here, right? But we're now testing a 15-minute order block. It's been mitigated now, so well, I guess it was mitigated during that little wick there, but I would yeah, just still watch it cautiously just in case. This zone has confluence for reversal. And if we dip down below it, we can bounce off the POC too. So you can secure your gains by moving your stop loss, like right here. Basically a break even. Or secure your capital at least. For Atom, just a review, we are preparing for a potential long. This is a really good spot to prepare for a long for Atom. I don't think with what's going on with Atom might have some relative strength and hold these levels even as everything else drops. It shouldn't drop too long. If anything, it should hold this level and just fill in this negative space before giving us a reversal. But yeah, that's pretty much it. So I hope this live's helped you guys out. You guys have an amazing day. Thanks for everyone who's been subscribing. We're close to 6,400 subscribers. So When we get there, it'll help with my OCD a little bit because we were just right below 6,400 for a while now. But then my next goal is 6,500 for like an ultimate goal of like 7,000 subscribers. So if you guys want to help by like sharing, subscribing, liking, and all that fun stuff to help with the algorithm, that'd be awesome. All right, guys, you have a great day. I'll see you in the next live tomorrow morning at 8 Eastern. And anyone who's part of the community, I'll see you guys in a call in about 19 minutes, where we're going to be looking over the market again or answering any questions in the Zoom chat. All right, see you guys.